Good morning, Jags. This is Fahad. Today is Tuesday, October 20th. Let's get started. Two stocks I want to discuss real quick. The first one is Keysight Technologies, Keys. Now, I'm going to give you a brief color over here, but then I will come back sometime in the chat room or webinar before the next earnings comes out, and I'll provide you more detailed view at that time and also provide you a way to trade this. But in short term, if you look at this chart, I believe this is setting up for a technical breakout to a new all-time high through $110 per share on long-term weekly scale. So here is a very clear-cut long-term weekly scale, and as you can see that this is attacking this resistance. Volume is light, but we have clear MACD and bull crosses in our hand. Earnings still have plenty of time to come out. They don't come out up until late November. This company has a different time period when it closes its quarters. It always reports the earnings very late in the cycle. But the setup is here after a year-long consolidation to break out from this through $110 per share and move up to 115 to 120. Yesterday there was an analyst upgrade for this particular stock, and we're gonna get more color on that one as well to see exactly what's in it, and we'll follow up. But I would like to point out that the last time when the company reported earnings on August 21st, it was a very clean beat and raise quarter. The third quarter adjusted EPS came at 37 cents above the street estimate, so a material beat. Similarly, the revenue rebounded sharply from COVID-related production disruptions from the prior quarter. There was a little bit some lags, some red flags over here in this earnings report, no question about it. So, for example, Keysight saw its order growth was down 4% year over year. But however, this was easily overcome by the strength of working through its existing large backlog that the company has. And so as a result, despite the order growth actually down 4% year over year, the combination of large backlog ended up resulting in or is expected to result in total revenue growth of 6% year over year in the quarter that will be reported in late November. So revenue growth is still positive, and it is important to note that that 4% decline in order growth was likely just a hiccup because of COVID shutdown. So I would expect a bounce back from that, because this company provides semi equipment testing services, or 5G testing equipment services, which is key for a lot of the deployment in the 5G space that is taking place across the entire country. So this is a secular growth story for many quarters to come. So therefore, I wouldn't expect the order growth to remain down. And once it bounces back, if it happens particularly in the next quarter, I believe there's a setup here for a potential technical breakout. Overall, once we account for if you look at the consensus estimates, and once we account for a decent recovery in the order growth rate, it is expected that the revenue top line growth rate will go from plus 6% year over year in the fourth quarter to 10% year over year within the next 2 quarters, to potentially as high as 14% year over year by middle of 2021. And that acceleration in growth rate should result, especially after year-long consolidation, with a multiple expansion and the earnings expansion, as a result, a potential technical breakout in the stock. I'll follow up with this one with more specific concrete channel checks before the next earnings comes out, but keep an eye on this chart, which is Keysight Technologies. Now, I do have one more stock and another one that I'm going to only briefly touch upon, and we'll cover this more in detail later, and that is Snap-on, symbol SNA, Snap-on. I really like this bull flag consolidation that is taking place over here between $154 and $161 per share. This is a classic play on growth to value rotation, and it's also a play on auto cycle recovering sharply. If you look at all the commentaries that we're getting from auto suppliers, as well as we're getting the commentary from companies like NXPI related, which has huge exposure to the auto cycle, or you look at the growth rate that's coming from OEM, there continues to be a significant bounce back in the auto sales from 6 months ago sequentially. 6 months of recovery has been seen consistently. And Snap-on provides a lot of the tools and a lot of other kinds of equipment that goes into machinery making and measurement tools and many other different things. This stock does not need an introduction. Important thing is that according to Bank of America note that came out last week, they're showing that the average daily auto parts retail spending grew by 16.7% for the week ending October 10th, which was slightly better than the 16.5% year-over-year growth they saw in the prior quarter. And this is all according to the aggregated Bank of America debit and credit card data, which touches about 10% of the consumers market. So you can see that this is a very good read through. We always discuss this all the time. Year-over-year spending growth in the auto parts retailers continues to come down from the sustainably high post-stimulus level. So there's no question about that, because there was a big boost that we saw in the second quarter from the stimulus checks. However, it's still, the overall growth is still, even so many months later after stimulus has basically gone away, we are still seeing the growth rate maintained between 16 to 17%. I believe that is fully not baked into consensus view. Earnings will be coming up from Snap-on October 22nd before market opens. And so that's in 2 days from now. I believe based on these comments, the setup is strong for a technical breakout. Here's another way of looking at this. Recently took out all of this consolidation and the congestion level around 152. And then it moved higher on very heavy volume. You can see that in the beginning of October, volume was quite strong. And then for the past 2 weeks or so, this has been a tight bull flag consolidation between 154 and 161. Based on these aggregated Bank of America debit and credit card checks, in 2 days from now, on Thursday morning, when this company reports earnings, I wouldn't be surprised if it blows estimates out of water and guides higher. And as a result, I would expect a breakout in this stock towards 170 plus. And that's it from me. Jay.
Morning, Pod. Today, I want to highlight a company called VCEL Corporation. Ticker is VCEL. This is a healthcare company with 2 distinct products. First is Macy, which it acquired from Sanofi back in May of 2014. Macy is a biologic device used in cartilage repair for the knee. Now, second is Epicel, which leads the company's burn franchise for adults and pediatric patients. The burn franchise was expanded in 2019 when the company acquired the North American distribution rights to Nexobrid from MediWound. Looking at the upcoming catalyst for Nexobrid, there was a note out last month from Truist saying that the BLA, or the biologics license application for Nexobrid, was filed in June, and approval is expected in 2021, ultimately expanding their addressable market. Now, VCEL estimates that the TAM for its burn products is over 300 million. Epicel is focused on severe burns, which are almost exclusively treated in burn centers. Now, according to a map, there are 132 of these centers in the country, of which, according to them, Epicel is used in about 40 of them on a regular basis. Now, if approved, Nexobrid will target patients with less severe burns that are treated in both burn centers and hospital trauma departments. So ultimately, the channel will get bigger. Last week, the company hosted an analyst day, which included a number of key opinion leaders from the burn care world, one of them being the president of the American Burn Association. Yesterday, Truist was out with a note following this event, just highlighting how their original bullishness on Nexobrid was based on data that came out from a DETECT trial. Well, they walked away from this analyst day with even more confidence in their conviction, as it appears that Nexobrid not only has the ability to offer superiority over the current standard of care, which is called surgical debridement, but it has strong enough efficacy that it offers the potential to change the treatment protocol in burn patients. So ultimately, I think what I'm going to do, and I just, as I'm mentioning, I just talked about Nexobrid. I haven't even mentioned their Macy product. So I think this type of stock is probably going to be best reserved for maybe a weekend research topic, to really kind of dive into each asset, and go from there. But the note out from Truist yesterday really caught my attention, so I wanted to bring it up to everyone.
It's very interesting. I haven't looked at this one in a long, long time, and it seems like there's quite a bit of reshaping of the company that's taking place here. Um, and so it would be interesting to see exactly how does this affect changes the product mix, or basically how does this affect the overall growth trajectory of the company in intermediate and in the long term. Um, and so particularly with that, the catalyst that seems to be in place. So looking forward to your article, whether it's weekend research, homepage,
Yep.
or any place else, I'll be interested in finding out. Purely technically speaking, you know me that I like long-term weekly breakouts because they tend to have much more sticking power in the long term, and basically they carry a momentum that is higher highs and higher lows for several quarters to come. And that's essentially the case over here, where after nearly 2 years of consolidation and doing nothing, this thing finally broke out very recently in September, I believe, to 2-year high. Now, since then, it has actually gradually pulled back a little bit, slightly so. And so the important support level continues to be between 18 to 1850 level. As long as that holds, the stock should gradually, continue to move higher with higher highs and higher lows. Looking forward to your article. Whatever you come up with, be an interesting read.
Yep.
Excellent stuff. Chronicle.
Morning. I have the latest checks on Bilibili from Quest Mobile, symbol
Yeah.
BILI. According to Quest Mobile data, Bilibili's daily active users rose by 33% year over year in Q3, while user time spent grew 41%. Overall, company's total monthly active users for Q3 is expected to be 197 million, representing 54% year over year growth, and then it's expected to retreat slightly to 195 million in Q4 due to seasonality. But what I'm most interested in is their mobile gaming segment revenue, which is forecast to grow 36% on year. We can see that all of Bilibili's main titles like Azure Lane, Arknights, Princess Connect, we can see from the charts here that their rankings have stayed pretty stable even though they're not new. But the more important thing that's not shown in this chart is that Bilibili is actually a co-distributor of Genshin Impact, which is a very popular new game that Jay also recently talked about with regards to Unity. So Bilibili is also a beneficiary of this game, and we should start to see revenue benefit from this game starting in Q4. So that's not reflected in this chart. Now, lastly, for advertising and live streaming, consensus is also looking for revenue to grow roughly 100% year over year, while live streaming revenue growth should stay strong at 110%. Also, there's a special factor currently that should help keep costs down, because right now we have the League of Legends 2020 World Championship going on. Broadcasting and promotion costs are already covered via the company's sub-licensed channels. And so from a margin perspective, there should not be a cost pressure, unlike previous years. So overall, looking at analyst estimates, they're expecting the company to report 68% year over year growth in revenue, which implies acceleration from 64% the previous year. However, net losses are forecast to widen to 932 million RMB versus consensus 909 million because of growing marketing costs. So that might be a concern going into earnings. The company could report above consensus sales, but losses that are worse than consensus, and then the stock could drop. Like it's a bit binary to make this call, but if you were to put me on the spot, I think what's going to matter the most will be guidance. And I think guidance is going to have upside surprise because of this new Genshin Impact game. And also Q4 tends to be loaded with seasonal events in Princess Connect. So I don't know whether or not the stock's going up or down on earnings, but over the next 12 months, I think there's a lot of upside.
As looking at this chart, as soon as recently as August of this year, this company for both its monthly active users and daily active users was hitting all-time highs, record highs. And that's right there. That's basically a read-through for the upcoming earnings report. The engagement has been rather very, very strong. Naturally, the trends, always basically there's some mean diversion in these trends, and so in September those numbers came down slightly, and with some moderation. But overall, when I look at, for example, this red line of daily active users, it's been pretty healthy overall. Also, a reminder to everybody who's listening to this podcast that Chronicle did present in Jaguar Media series called Chinese Tech Demystified, a bull case for BILI back on September 11th. This is available right on Jaguar Media, and along with it, the entire slide deck as well as research note can also be downloaded right on the website. So this is a quick 15 to 20-minute video that explains in detail our bull case on this particular stock. So coming back to your point about about the upcoming earnings report, as long as these trends are holding, I think there's reason to believe that sequential improvement will be quite significant, and engagement metrics, are going to result in potentially better than expected beat on revenues, and management will likely carry that forward with a guidance raise, right? That would be my assumption. So I wouldn't worry so much about the upcoming quarter. Purely technically speaking, I think some people will look at this chart and they will say, this looks like a head and shoulder topping formation with the left shoulder here and the head here and the right shoulder here, and neckline at $40 per share, so potential breakdown. Yeah, maybe, but I've seen more failed HNS patterns in my life than any of the technical studies, so I don't bother with that at all. Important thing is this $40 continues to be a magnet of support here. Each time it has come up to that level, it has become a buying opportunity, and I wouldn't expect anything else any different at this point. And so also recently, the massive rally that we saw off of this support, which was beginning of October, we saw 2 days of heavy volume, large surge, and that is also telling me something, that this stock has been under a steady accumulation. So I think chart looks fine at the support particularly. I think the fundamental case remains strong, so I would expect a pretty good quarter when it reports in the second week of November. Any final quick thoughts on this one, Chronicle?
Yeah, so going back to what I said about Genshin Impact, I don't think that's factored into consensus numbers yet.
Okay, so do you think it could have a significant impact materially, or
Yeah,
just
like
a
it just launched in late September, so
I see.
that's gonna be in Q4 guidance.
Okay. All right. We'll keep an eye on that one too. Good stuff as usual. Thank you very much for joining. That's it from us. We'll see you in the chat room shortly.